Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss whether or not, forgot my light, whether or not the market, which has experienced the Trump bump, is about experience the Trump stock. Say that again, the Trump stock dump. As well as that, I want to talk about how a certain supermarket with amazing earnings report has still disappointed the market. As well as that, is there a sign that there may be a dark horizon on the US job market? But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, for the risks at hand before entering any trade. With that out the way, let's get started. So yeah, today I want to talk about whether or not the stock market in the US is living in a sort of a false illusion. Okay, a false illusion. And I want to go through a few bits and pieces on this because, as we know, the S&P 500 again yesterday hit an all-time high, and as the market is currently trading, I can see now it's still hovering around an all-time high. Now, the question I have is: yes, we're experiencing an all-time high, but are we kidding ourselves? All right, is the market, thinking, living on falsehoods, so to speak? And yeah, you can have your argument. The VIX, for example, we'll look at both the S&P and the VIX. The VIX, which is obviously the fear indicator, is still trading pretty low. It's still trading very low. If there was general concern or general feeling there was concern, the VIX would be trading high, but it's not. It's still trading quite low. But again, this is a question I want to ask. Are we experiencing the calm before the storm? And there's several reasons for this. And let me go through it with you. What makes me question this? Number one, obviously, the word of the year is tariffs. And we've heard nothing but tariff threats from Donald Trump since he took office, or even before he took office. So, yes, we have got the tariff threats. Don't forget, yesterday, he said he was going to introduce tariffs on all automobiles, pharmaceuticals, and AI chips. Tariffs of 25% starting from the 2nd of April. And of course, it's always ongoing. There is those who argue that these tariff threats are just a bargaining tool, but you can never can say. But that's pretty disconcerting. We also have brewing discontent because these tariffs with key trading partners and political allies. Don't forget the recent phone call that Trump made to Putin, the peace meeting that Russia and the United States had in KSA, the emergency therapy session that President Macron called in Paris for key European members because they weren't invited to the table for these peace talks. And now, obviously, you got the comments on Truth Social about Zelensky and things like that. And it's anyway. So yeah, there is also an issue with political allies. And the other reason why I ask about the US stock market, whether or not it's living in a false illusion, is there appears to be a change in a choice of investment. Because despite very strong performance last year, and every analyst believing that the bull run on the S&P 500 will indeed continue, European stocks are beating American stocks. Let me say that again. European stocks are beating American stocks. Now, I did a little bit on this segment yesterday. I'll just go back over it again. Now, Bank of America, they did a survey on fund managers so far in February. Okay, see where they were putting their investments. 34% fund managers went with global stocks, 22% went with gold, and 18% of fund managers went with US equities. Mohammed, very good question. Especially the DAX 40. That's very, very true. Very, very true. Yes, the DAX 40 in particular. And we'll be looking at them all. Performing very well. Nice. Good to see you, Mohammed, by the way. Thank you for coming. That's a good, very good point. Very, very true, actually, the DAX and Euro Stocks 50. We'll look at those. But you're right. Like I say, so I went over this yesterday. 22% of fund managers listed gold, and only 18% of fund managers went with US equities. Okay. So, you know, the star child of the market last year, which was the US stock market, is not shining so bright. And there's another reason. Gold, of course. Gold's hit another all-time high, and it seems to be doing it almost on a daily basis. Now, I did a webinar yesterday, obviously, where I discussed with gold, we'll go to $3,000 in 2025. And there's a number of investment banks who believe it, you know, will do that. Goldman Sachs, reckons $3,200 by the end of the year. UBS also believes $3,200 is coming as well. But, you know, if, again, this is, and I said this in the webinar, this is what really generally confuses me, because if the S&P is hitting an all-time high and gold is hitting an all-time high, it should be the opposite. You know, they're not positively correlated. You know, they're not positively correlated. S&P should be, you know, if gold's going up, S&P should be in trouble. So again, this is why I'm asking, you know, are we living, or is the US stock market living in a false bubble? There's another reason as well, another thing I want to bring up. Crypto enthusiasm at the moment has faded slightly. I mean, I'm not saying it's kaput, it's over, but it has indeed faded. Don't forget, when Trump got in, they hit 100,000 because he's going to change regulation and make it all really pretty and great for cryptos enthusiasts. But since then, it's dropped down. So that's a bit worrying as well. Another point I want to make, Magnificent Seven are not so magnificent. I said that word again. Magnificent. Yeah, I've got it right. As they were. In fact, if you look at the seven, it's only really Meta who has performed and is up 20% year to date. Everything else is not performed at all. Nvidia, for example, had a nightmare when DeepSeek did their announcement. There's another thing. This happened at the beginning of the month, went under the radar. Consumer sentiment is at a 7-month low. And the final point I want to bring up before we have a look at the charts, and we look at the DAX as well, is we had obviously the FOMC minutes last night. And it was pretty much confirmed the Fed will only cut rates when inflation is falling or they're comfortable with inflation. Inflation is rising. In fact, the last 5 readings, it's been steadily going up, apart from the BIP in October in the US, but it was slightly lower. But September, November, December, January was all rising. And the last reading last week was 3% above the expectation of 2.9. So it's rising. So that's the question again. The market, obviously, at the very beginning of the year, tail end of last year, was enjoying the Trump bump. But will it become a Trump dump? This is the big question I have to ask. Anyway, let's have a quick look at the market. And we'll look at some of these European stocks as well, like I said, because they have performed really, really well. Now, obviously, this is the S&P on the daily. As you can see, you know, it hit an all-time high again yesterday. All right. And it's still sort of hovering pretty close to it. Okay. On the day, it's opened a little bit lower, but it's still hovering around the all-time high. If we look at the volatility index, again, this is on the daily, you know, it is still pretty flat and pretty low, you know. So this is, you know, again, this should be an indicator telling us that, yeah, we're approaching troublesome times, but it's still pretty low. But I'm thinking, again, we're kidding ourselves. We look at gold, again, hit another all-time high again this year. You know, so we shouldn't be seeing this. Currently trading now at $2,938. It hit the high today of just under, what's that, $252, around that. Remarkable. And like I say, if we look at European stocks, like Mohammed actually pointed out, if you look at the DAX for DAX 30 first, you know, look at this steady roll. Look at these days of gains it's had. 1, 2, 3, 4, 5, 6 gains, slight loss, then another big gain. Yes, of course, you're going to have a bout of profit taking when it hits an all-time high, but again, it's holding its own. Euro stock 50. Let's look at this 50 index. Okay, look at these gains. Yes, okay, it was driven by defense stocks. But that only happened on Monday. You know, it was encouraging beforehand. Just so you know, gains today on the Euro Stock 50 so far this year is 10%. Gains on the S&P 500 so far this year is 4%. So, you know, again, like I say, this is an open question. I'm not saying this is, you know, I'm right or I'm, you know, it's not my, it's just an open bar. So please let me know your comments, what you think about what I'm talking about. Do you see there, you know, do you agree with me? Let me know, you know, let me know what you think. But anyway, I want to go into a different story, go on to something else I want to talk about. Again, this is what's slightly worrying again a little bit as well. Is obviously, you know, we've still got earnings reports, and we had Walmart's earning report came out, and it was a lot better than expected, a lot better than expected. So really, realistically, the market should be getting out is bunting and celebrating, but it didn't. Instead, they looked at their forward guidance of what they see for the remainder of 2025 and 2026. Obviously, Walmart's, you know, is going to be affected by tariffs. So this is something else they're affected. But just, you know, up to this point, up to today, Walmart's shares saw 75%. This is year on year, compared to 23% gain on the S&P 500. So it's been performing quite well. But I just want to have a quick look at Walmart because this is interesting. All right, let's have a quick look at a 30-minute first. Now, bear in mind, their earnings were better, but their guidance for the future was not so comforting to investors. But look at this drop on the open. Now, this tells me I need to look at Target and I need to look at Costco coming up soon. I think Target's earning is due early March. So those are the companies I'll be keeping a close eye on. But look at that drop today and how much investors are still feeling. And this is, again, the other point I'm making with the S&P. If Walmart's earnings can be better, but the guidance for the future is not, then why is the people kidding themselves about the S&P 500 at the moment? Again, I don't know. I'm just asking a question. If you look at it on daily, again, this goes on to my point earlier on that overall Walmart has been performing really well. If you look at the daily, you know, look at this steady gains are way above the 200-day moving average, but today is definitely a fly in the ointment. Finally, the only thing I always want to talk about, again, interesting, it's an open forum. It's always an open forum on these lives. US initial claims was announced slightly higher than anticipated, only slightly. Came in at 219,000 versus 215,000 expected. Not a massive difference. You know, if it was a really big number, I probably would be a little bit more a bit more aware of it. However, like I say, I do look at the initial claims. I know it's every week because the way I see it, if I start seeing a steady increase, I see it as like an early warning indicator that there might be something wrong in the US labor market. You know, I always see it like a canary in a coal mine as an early warning indication that something might be afoot. Anyway, the rest of the week, the only thing to come really tomorrow is S&P Global Services, PMI, and next week will be a lot more. We have obviously EU CPI as well, and US GDP, I believe, if my memory serves me correctly. But anyway, don't forget, this is indeed a live show, so you can ask me questions anytime you want, or by all means, jump in with the conversation, share with me your opinions. Let me know what you think. What do you think about what I've been saying today? Do you think the S&P is going to carry on? I mean, during the Trump bump? Or are we about to experience a bit of a crash? We're pretending to ourselves. Are these tariffs generally a real threat, or is it again just Trump's way of doing bargains? You know, are we any closer to having peace in Ukraine, which will make a big difference to Europe? Or again, are we hit another bump in the road with the recent fallout between Zelensky? I said it again, Zelensky. There we go, got it back. And Trump. Let me know your opinions. Or how about gold? Do you think gold is going to go to $3,000? Anyway, you can talk to me anytime you like, because these are live shows. If you're not watching this show live and you have a question or you want to make it, I've got a question comment here, I think. This is a really good question. Really good, actually. After Trump's arrival, nothing is working as it should. Neither fundamentals. I know. Fundamentals are having a definite impact. A dividend impact that should be, or neither. That it should, or neither. The technicals are working properly. Yeah, like I say again. Yeah, I think you're right, because this is what's sort of puzzling me a little bit, to be absolutely open. Is we should be seeing the gold and the S&P going opposite. I think the market's trying to double guess. I really do. I think we've had Trump 1.0, and now we've got Trump 2.0. We're used to some of the stuff he said previously, so I think the market's taking it with a little pinch of salt. What he did with Mexico and Canada, with that threat as well, and then next day, I'm going to give you a reprieve, not do it straight away. Then yeah, that's why the market's also thinking, okay, your bark is worse than your bite. But there is still so much of that uncertainty. I think there's other things in it as well, not just Trump, which is what's making me ask the question. You know, the fact that the Fed is not going to cut rates, whereas the likes of Bank of England and the ECB may do, which obviously will give more growth opportunities in Europe, whereas the US won't have growth opportunities. So that's another factor as well. But that's a really good point, Mohammed. I think you're very right. And yes, I know I struggle with that name. I struggle with names. I really do. I really do. Watching from Bangladesh. Can I say that again? Welcome. I hope you're enjoying the show. Do you have any opinions, my friend, on the current market? Anything you wanna add or say? Broker's Core. I like that. It's a nice name. Anything else? Anything else? Anybody else like to say? I mean, for example, Mohammed, you mentioned the DAX 40. You're trading that yourself personally at the moment? Oh, I've got another question. We want more education from you. Well, don't forget, I do webinars every Wednesday, which are a little bit more educational. These sort of shows are more a little bit about market insight and things going on. But I do a live show. OneRoyal Live is live every day, once a day at least. When things hot up and the market starts really acting, I'm going to be doing more than one show. More than one show. There's a great question here again by Mohammed. Will gold hit 3,200 before April or May? At this pace, it should. In theory, well, like I said, I've traded gold since 2006. It was my very first asset I ever traded. Okay? Very first asset I ever traded. And when I started trading gold, it was trading around $636 an ounce. Okay? Being around, again, like I said, been trading around $636 an ounce. I remember the day it hit 1,000 in 2008. And I remember that was such a big deal. Everybody was talking about it. It hit it. And then after that, obviously, we had a sell-off. Now, at this rate of pace, in theory, we should basically come close to $3,000, but you never know. You might get a bout of profit taking. My biggest fear with gold at the moment is if we start seeing gold appear in, because there's a lot of talk about it. There's a lot of excitement about it, a lot of interest about it. If it starts appearing in non-market related tabloid news, like the BBC or something completely unrelated, then that's often a sign of we're on maybe on a potentially on the fifth wave of an Elliott wave. So that's the concern. So I can't tell you for will it go to 3,200 before April and May? I don't know. I wouldn't gamble. I know we're going to get close to $3,000, hopefully, potentially during that time. But if we all knew for certain, we'd all be very rich people, obviously. To be honest, people need a good mentor and solid education. Well, yeah, I totally agree with you. I mean, my attitude to it and my ethos is always been more of a case of trying to, be open and try and explain stuff in a simple and understandable way. Okay, I don't for a second ever claim to be a market guru or an expert. I never claim to be an expert because I don't believe there is such things as experts. I believe we're always continuing learning. But I do try and share some of my experiences, some of my knowledge as well, to help people, to help them really find their own way and help them become the trader they want to be. That's the way I always see it. But it's great to hear. Any other questions or anything else at all? Okay. Well, look, if there is no more questions, can I just say, fantastic. Thank you so much to Mohammed and to Brokers Court. It's been really nice. It's really nice to actually, have a conversation with people on these lives. This is what the live shows are all about building community, chatting with each other. Oh, there's another one. Talking. Do I trade myself these days? Occasionally I do. I'm a position trader though, Mohammed. I'm not a day trader. I'm a big gold bug. So I hold gold positions and other bits and pieces like that. But good question. I mean, are you a day, just out of interest, are you a day trader or what type of trader are you? What's your trading style? I'm just interested to know. Okay, guys. But honestly, this is brilliant. This has been really, really, really good. Really good. Okay. If there is no further questions or no further ideas or comments, there is one more. I'm just learning. Excellent. I'm just learning in day trading. Okay. Have you come to any of my my webinars at all? Did you come to yesterday's one, which we talked about gold? Only been a few months. Okay. Well, I tell you what. Okay, you're part of the OneRoyal family, I'm guessing. Keep an eye out for the educational webinars I do every Wednesday. It's webinar series called Market Bites. So, like I said, the two topics we've done, I've delved into what tariffs are and the implications of what that means to markets, because so many people don't actually know what tariffs are. We have talked about gold. Excellent. Yes, of course, I remember you now. Sorry. Of course, sorry, it's the first name threw me off. Yes, and we talked about gold. Yeah, I know we do. We both love gold, though, don't we? That reminds me, is another question I have for everybody. Yesterday, yeah, I remember. Did you like that? Did you like the webinar? It was good, wasn't it? I enjoyed that one too. I really did. I thought it was really good. Again, we had a lot of interaction, and this is what I really, really like. Which leads me on to something else, actually, which is a good idea. I mean, don't forget, guys, and ladies, if ladies are out there watching, for topics like this on the live streams, or for topics which we have for the webinars, if there's any sort of area of education you want me to do in particular, like, for example, I don't know, you maybe want me to do a webinar on fundamentals for stocks or fundamentals for currencies or commodities, or if you want me to do some technical analysis or market sentiment or market psychology, which so many people overlook, feel free to let me know. You know, you can either let me know here or put in the comments below and let me know if there is a particular topic or something like that. I will do. Yes, it was really good. I know it was great. I loved it. I had such a good afternoon. I was so happy with the chat and the conversation. It was really, really good. Really, really good, Assad. I loved it. I thought it was brilliant show. And like today's been a great show as well. It's been fantastic talking to everybody. It really has. Like I say, don't forget, guys, I'm live every day. Okay, usually around about 5 p.m. When the markets pick up a bit, I will be probably maybe doing 2 shows. Or if there is suddenly breaking news, I will be going live again as well. These are excellent. Excellent. Thank you. Brilliant. Well, like I say, if you want me to do those topics, I will do them. Yeah, so the fundamentals on stocks, commodities, currencies, I'll do them. Market sentiment, which is really important. Like, for example, okay, this is really for position traders. Like the commitments of traders report. Nobody knows, very few people know what that is. Okay, done. Deal. Sold to Assad. We're going to do that then, mate. We'll do that. We'll do fundamentals next week. Okay? We'll do it bit by bit, nice and steady. It's yours. We'll do that next week. Definitely, bud. Definitely. Okie dokie. Right, guys, it's been an absolute pleasure. It really, really has. It's been absolutely fantastic, in fact. Don't forget, I'll go live every day. I'll be going live more than once a day in the coming weeks. Like I say, it's been great today chatting with many of you about it. And like I say, you know, let me know your comments or what you think on the future. Again, like I say, if you're not watching this show live, by all means, you know, put the comments below or ask me if you have a question. Put in the comments below and I'll answer it next time I'll go live, which will be tomorrow. Anyway, if you're watching me on YouTube, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you enjoy this type of content, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.